Hello everyone, this is Research on Investments, and today I'll be presenting on how Broadcom is positioning itself as a transformative force in semiconductor and AI markets. Over the year, Broadcom has delivered impressive growth, leveraging strategic acquisitions like VMware's and its expanding AI profile. We will be delving into the company's financials, milestone, its AI-driven transformation, projections for the coming years, and the risks that it faces. Before going any further, I would like to mention that it takes a lot of effort to create these videos, so if you find them helpful and want to see more, please consider giving a thumbs up and subscribing to this channel. So let's dive in. Here are some topics we will be looking at today: Broadcom's financial overview, risks, Broadcom's long-term growth prospects, stock valuation, and finally, if I will be buying the stock. So let's look into the latest financial. Broadcom has delivered exceptional stock performance over the year, with its price surging over 113%, notably in just the past month. The stock has risen by 25.2%, reflecting strong investor confidence in its growth trajectory. Its market cap stands at an impressive $1.1 trillion, placing it among the tech giants. The price is currently near its 52-week high, signaling strong momentum, although it's worth considering valuation risks at this level. Broadcom has shown exceptional revenue growth, with fiscal year 24 revenue reaching $51.6 billion, a 44% increase from previous year. This was primarily driven by its AI semiconductor business and VMware integration. Its gross margin of 76.4% highlights Broadcom's operational efficiency. While revenue growth is expected to moderate to an 8 to 12% CAGR moving forward due to its large size, Broadcom's consistent focus on high-margin business like AI semiconductors and infrastructure software provides long-term stability. Importantly, its AI revenue, projected at $10 billion in fiscal year 2024, now accounts for 35% of its semiconductor revenue, solidifying its leadership in its critical growth area. Broadcom operates with a high debt-to-equity ratio of 105.6, reflecting a capital-intensive model business reliant on significant leverage. While this has enabled growth through acquisitions like VMware, it does create financial strain. The interest coverage ratio of 2.6 suggests Broadcom can meet its current interest obligation. Any increase in interest rates or revenue slowdowns could bring some challenges. Additionally, the company's payout ratio of 182.9% raises questions about the sustainability of its dividend policy. Broadcom's reliance on three hyperscale clients, Amazon, Google, and Meta, for nearly half of its semiconductor revenue is a key risk. A slowdown in these client spending or shift towards in-house solution could impact Broadcom's top line. The company also faces stiff competition from Nvidia, which dominates the AI GPU and InfiniBand networking markets. Additionally, weaker demand in its broadband server storage and wireless business creates a near-term headwinds, with recovery not expected until the second half of fiscal year 2025. While Broadcom has significant financial leverage, its cash flow remains sufficient to cover interest expenses. Broadcom's financial strength lies in its ability to generate robust free cash flow, which generates its dividend program and R&D investments. Its dividend growth at a 13% CAGR over the past 5 years highlights management commitment to shareholder returns. The company's operational expertise has allowed it significantly reduce VMware operating expenses while maintaining high margins. While investing heavily in R&D for AI chips and networking solutions, Broadcom is ensuring its competitive edge in high-growth markets. Broadcom's long-term growth is centered around explosive demand for AI infrastructure, custom chips, and networking solutions. Let's break down why Broadcom is well-positioned to capitalize on these opportunities. Broadcom's AI semiconductor business has exponential growth, with fiscal year 24 AI revenue reaching $12.2 billion, a 220% year-over-year increase. This growth is driven by products like custom AI accelerators, networking chips, interconnect solutions. Broadcom's advanced profile is integral to hyperscalers like Google, Meta, and ByteDance, who continues to scale their AI infrastructure. With AI revenue now accounting for 35% of semiconductor sales, Broadcom is on track to achieve its fiscal 2027 revenue target of $60 to $90 billion from AI applications. Broadcom's growth strategy have been a consistent driver for its success. By focusing on acquisitions, Broadcom has built a sustainable franchise capable of driving organic growth post-integration. Its $69 billion acquisition of VMware underscores a shift from purely semiconductor company to a leader in enterprise software. Broadcom's shift towards software acquisition reflects a strategy of diversifying revenue streams and creating recurring income. VMware transition from perpetual license to subscription bundle is a prime example of this shift, driving double-digit revenue growth and stabilizing cash flows. Broadcom's long-term approach focuses on durable markets, ensuring investments are directed towards areas with significant 10 years growth potential. Networking wireless remains key revenue contributors, and Broadcom's market leadership in these areas is vital for its future success. Broadcom's ability to cut costs and streamline operation post-acquisition, as seen with VM, makes its growth strategy highly effective. Broadcom's dominance in networking is anchored by its Ethernet solution, which are widely considered the de facto AI network due to their cost effectiveness and capability. Products like Jericho 3 AI and Tomahawk 5 chips are enabling hyperscalers to connect tens of thousands of AI accelerators with high bands and low latency. Broadcom, as a critical supplier for cloud giants such as Amazon, Google, and Microsoft, who are investing heavily in AI data centers. As of now, Broadcom's Ethernet and Nvidia's proprietary Infinity Band are two most prominent networking technologies. Broadcom's Ethernet is much cheaper than Nvidia's Infinity Band. It is widely used in most data centers around the world. Broadcom's Ethernet is widely compatible with most networking devices and servers. Broadcom excels in developing custom chips, AI chips, or ASICs for hyperscalers like Google's Meta and ByteDance. These chips are tailored to specific workloads, offering clients greater efficiency, reduce cost, and manage specific AI tasks at a fraction of the cost to Nvidia's GPUs. Broadcom's Ethernet solutions offer a cost-effective alternatives to Nvidia's Infinity Band, as shown here. Broadcom's Ethernet technology delivers 30% faster failover recovery while maintaining an affordability and broad capability with existing data center infrastructure. This balance of performance and cost positions Broadcom as a preferred choice for hyperscalers who are scaling their AI infrastructure without overspending on networking solutions. Broadcom's networking solutions are the heart of AI data centers, providing seamless connectivity between CPUs, GPUs, and accelerators. Thor 2 NIC, a next-generation network interface card designed for low latency, high bandwidth AI workloads, critical for hyperscale environments. PCIe Gen 5 or 6 switching solutions. These provide ultra-fast connectivity between AI accelerators and CPUs, reducing latency and maximizing throughput. Jericho 3 AI, optimized for AI cluster scalability, enabling advanced connectivity between thousands of AI accelerators. These solutions ensures Broadcom remains a key enabler for hyperscaler AI developments. Broadcom invests over $3 billion annually in R&D, focusing on custom ASICs, PCIe Gen 6, co-packaged optics, and other advanced technologies. This ongoing commitment ensures that Broadcom stays ahead of competitors in innovation and product performance. Broadcom's focus on technologies like CRDS and advanced packaging, which are critical for next-generation AI and networking solutions. These investments underpin Broadcom's long-term technology leadership. Broadcom has established strong multiple generational co-development agreements with hyperscalers like Google, Meta, and ByteDance. These partnerships allows Broadcom to align its innovation pipeline directly with the needs of its clients, ensuring consistent revenue growth. The production ramp of custom AI accelerators highlights how Broadcom's partnership with these clients drive its dominance in AI ecosystem. Broadcom's AI revenue growth has been an exponential, reflecting the surging demand for AI infrastructure. In fiscal year 2024, Broadcom AI revenue is expected to surpass $10 billion, accounting for 35% of total semiconductor revenue. This is a drastic increase from just 5% in fiscal 2019 and 15% in 2023. Broadcom's strength in custom AI accelerators and networking chips is driving this growth, positioning the company as a core supplier for hyperscalers like Google and Meta. The shift in revenue composition demonstrates how AI is becoming the largest growth driver for Broadcom's semiconductor business. By acquiring VMware has significantly strengthened Broadcom's infrastructure software segment, now contributing 40% of total revenue, which is about $20 billion. This transition from perpetual license to subscription-based VMware Cloud Foundation services is driving double-digit growth. VMware solutions such as vSphere and VCF are modernizing on-premise data centers, offering hybrid and private cloud alternative to hyperscalers' public clouds. These capabilities position VMware as a key enabler of Broadcom's long-term software strategy. Broadcom's competitive edge lies in its ability to deliver cost-effective and scalable AI solutions. Its dominance in Ethernet-based networking and its custom chip capabilities position it uniquely against competitors like Nvidia. Furthermore, Broadcom's R&D leadership with over $3 billion in annual investment ensures continuous innovation in critical areas like PCIe, Gen 5 or 6, custom ASICs, and co-packaged optics. Strategic partnership with hyperscalers further solidify its long-term growth prospect. Broadcom's long-term growth projections rooted in the rapidly expanding AI market, its strategic hyperscaler relationship, and its unmatched profile of networking and custom chip solutions. This growth potential positions Broadcom as a leading player in AI ecosystem for years to come. So now let's evaluate Broadcom stock. Here's the tool which I developed that will help me evaluate Broadcom stock using discounted cash flow model and multiple earnings model. And this time I'll also incorporate a forward sales evaluation model as well. So here are some of the key metrics which I've already inputted. So free cash flow, revenue, shares outstanding, and I will be looking over the 5-year projections and growth rate and price of sales. This would be used for the forward sales valuation model. So for now, let's look at some of the key metrics that I placed in. So for on the low side, this reflects the most conservative PE ratio profitability outlook for Broadcom. The low case assumes a PE multiple of 12, which aligns with the scenario where AI adoption is slower than expected, leading to reduced revenue growth. Competitive pressure from Nvidia, AMD, and other AI semiconductor players. Broader microeconomics headwinds reduce investor sentiments towards tech stocks, compressing valuation multiples. Additionally, this projection incorporates the possibility of declining margin due to inflationary pressure or unexpected R&D costs, and adds for its mid cases the PE multiple of 18, which reflects Broadcom's current earnings valuation reflective to industry standards. So in this scenario, I'd assume the stable AI infrastructure demand from hyperscalers like AWS, Google, and Microsoft. Broadcom's capitalization on its custom chips leadership, particularly in networking and storage solutions. Consistent performance in VMware integration and growth from subscription-based software revenue. PE of 18 is considered reasonable, I believe, and aligned with Broadcom's historical average. As for its high assumptions, which I assume the PE to be 22, reflecting an optimistic growth outlook for AI and demand. In this scenario, Broadcom profits from accelerated AI adoption globally with rapid development of data center infrastructure, strong headwinds from its leadership, Ethernet connectivity, and custom ASICs for hyperscalers. Also, investor optimism derives a premium valuation multiple as well, reflects of Broadcom's sustained dominance in AI. So based on that, these are some of the assumptions I made. So now let's look at that. So here are the results. I want the actual discount rate to be 12% and I want the mid to be 11. So let's recalculate this. So, and here are the multiples: earnings low, mid, and high estimate. And as for its discounted cash flow model, results shows the low side to be 224, mid to be 345, and high to be $502. So if you believe on the low side, this kind of represent a minimal growth based on assumption that Broadcom exposure to AI market may not yield significant revenue boost in the short term. External risks such as global geopolitical tensions, economic slowdowns, or increased competition weighs on growth. And as for the mid side, 8%, this reflects the most probable growth scenario, accounting for a steady adoption of AI chips, robust data center demand, and VMware contribution to recurring revenues. It's consistent with historical growth rates with Broadcom's ability to retain market leadership. As for the high expected growth rate, I just assume that the accelerated growth driven by global hyperscale adoption and increased penetration in custom AI chips and Ethernet solutions. AI market growth could create significant tailwind for Broadcom's core segment. And as for its profit margin, so I kept the low side to be 18%, which reflects reduced profitability due to its potential pricing pressure, competitive market dynamics or less favorable product mix. A higher operating costs such as R&D and custom chips could erode margins. And as for its mid side, which represents Broadcom's current net income margin, which is supposed by efficient cost control and strong product mix of high margin software and semiconductors. So that's why I assumed the profit margin to be 22 and 25 to be optimistic, where VMware and cost efficiencies in manufacturing R&D are generating higher revenues. And as overall, these valuation highlights Broadcom's strong long-term prospects in AI and semiconductor market. So I've been accounting for various degrees of market growth, competition, and microeconomics uncertainties. So this is just my assumptions and nothing more. So the result shows compelling upside potential across all scenarios, with conservative valuations still pointing to significant room for growth. Also incorporated a forward sales model as well. In this model, which is essential for evaluating high growth companies like Broadcom, this model offers a forward sales looking perspective by combining expected revenue growth with market valuation multiples. I believe this model could be useful for companies where revenue growth drives valuation. With Broadcom's, we're dealing with a business heavily involved in AI and semiconductors, sectors that are seeing rapid growth. This model leverages current revenue, expected growth rates, and market-based price-to-sales ratios to calculate intrinsic value, aligning with how investors should approach this company. And as for Broadcom's strong position in AI and semiconductor market, supports the use of this model, I believe. In recent revenue growth of 7.9% demonstrates its capability to capitalize on industry demand with a price to sales ratio of 22.64. We capture investors' optimism and expectation for future performance. Using a projected revenue of $55.6 billion and a price to sales ratio of 22.64, the model calculates an intrinsic price of approximately $262.85 per share. This aligns closely with market expectation and reflects Broadcom's growth potential in rapid evolving industry. This forward sales valuation model provides a robust framework to understand Broadcom's valuation. All of these multiple discount cash flow and forward sales model are estimates based on what I believe the low, mid, and high to be, and these are all my assumptions. Now let's look at Morningstar estimate the fair value of Broadcom stock at $190 per share. With its current trading price at $224, this gives us that the stock is slightly overvalued. Broadcom's market cap of $1.1 trillion highlights its immense scale and influence in global semiconductor and software markets. Importantly, Morningstar assigns Broadcom as a wide moat, recognizing its superior chip design capabilities and deeply integrated software offerings. So, will I buy the stock? Yes, I will be buying Broadcom stock. While there are some bear cases to consider, but the bull case so far is more compelling. I've already owned Broadcom and it's currently accounted for approximately 22% of my portfolio. Let's analyze both the bull and the bear case. Starting with the bull case. Broadcom is a leader in AI, semiconductors, and networking, two of the fastest growing sector in technology. Its AI revenue is projected to grow 40% annually through 2029. Driven by its dominance in custom accelerators and networking solutions. Broadcom is expected to grow 50% of the 60 to 90 billion AI market by 2027. Beyond AI, its diversified revenue stream, including VMware software's contribution, make the company resilient to market cycles. With 9 billion annually in R&D investments, Broadcom is at the forefront of innovation, solidifying its competitive edge. However, there are some bear cases to consider. Broadcom's valuation leaves little margin for error, and its reliance on major clients like Apple and hyperscaler cloud vendors creates some vulnerability. Additionally, these cyclical risk in non-AI chip markets could temper growth in the short term. That said, the bull case clearly outweighs the risk, and my confidence in Broadcom's long-term potential remains strong. I already own Broadcom's stock and it currently makes up 22% of my portfolio. This reflects my belief in its ability to drive significant return, particularly as the AI revolution continues to unfold. Until then, I will continue to add as long as the stock is undervalued. Please note, all of these are solely my opinions and analysis derived from my research. They do not constitute financial advice. Investing always carries inherent risks. I recommend conducting your own research and thorough due diligence before making any investment decisions. This is from Research on Investments, and see you in the next video. Thank you.